Hello YouTube. Welcome to a trading video. Today I'm going to be talking about what liquidity is in the markets. Hold on. Let's see if I like that better. Yeah, I guess for now. Okay. So, what is liquidity, right? Liquidity is very important in the futures market, in all markets, but especially in the futures trading market, which is precisely what I trade, and even more precisely, I trade the NASDAQ and the S&P 500, right? So I'm going to try to find some examples for you guys. Basically, all a liquidity or a liquidity pool is a high or a low in the market. And this idea of liquidity gets created or assumed because lots of people trade trend lines, or they trade spikes in price direction. So if price makes a big move up, they FOMO and they don't want to get left behind, right? Because there's lots of gamblers in the market and they want to make money. And they think if they get early enough, then they'll catch the wave and then they can just ride it out, right? So like right here, it was going up. This was Monday. This was the Trump candle. So, there was definitely people, sorry for that noise, who saw this go up. And if we look, okay, well, what the heck? If we even look on the 1 minute, we can see that this was insanely steep, right? So a good trader would not enter a long during this 1 minute bull run, right? Because a good trader has a setup and knows his setup and follows his rules, right? But there's lots of people gambling the markets trying to make quick money, right? So here or here, they would have entered and then they would have got stopped out, right? So there's even people that bought all the way up here and they got stopped out. Right now, liquidity is this idea that there are still buy orders all the way up here that haven't gotten exited out on yet. Now, is this true? I don't know, but it tends to play out in the markets. I can't lie. So basically, that's what liquidity is. It's this idea that there are still unfilled either buy orders above a swing high or sell orders below a swing low. And I'll show you an example of that. So we go here, right? Let's just say right here. So we were in this steep downtrend. Gamblers didn't want to miss this move. They FOMO, they enter somewhere down here, and then they get stopped out, right? But with liquidity, we can say that this is a key level to attract price. And obviously, yes, price did come to this level, but it came much lower, right? So obviously, there's no way to know exactly when a quote unquote pool of liquidity is actually attracting price, and then price will reverse off of that liquidity sweep. But it is an idea that is used by many traders, and I do use this idea, and I have been right many times, so I will continue to use this idea of liquidity in my trading strategy. All right. So, there's not really a whole lot for me to say. I can give you guys a few more nuanced examples here. So there's this thing called trend line liquidity. And don't worry, guys, I'm going to be making more videos. But let me just tell you what this is real quick. So if we start looking here and then we stop looking here, what do we see in between this? Well, we can see that price started up there and price ended down here. And obviously when price starts above and then ends below, that means that the action of price in between the starting and the ending point was going down, right? It was in a downtrend. And you can see that this downtrend is not a perfect line. It is jagged. There are highs and lows. But as you can see, for most of the time, the new lows getting created happened below the previous low, and the new highs getting created, besides this high here, which was higher. But actually, this is still a good example, because the close body was below the previous high body, or below the previous high close of the previous candlestick bodies. So this is a valid new downward high creation here. So then at this point you could have thought, okay, we're in a downtrend. Obviously there was a little bit of consolidation here, but then price moved swiftly down, creating another new low and then a new lower high. And then we continued this trend for a good amount until we hit here. And then obviously the markets decided to create an uptrend and move upward, right? And there are many reasons for this, right? You can theorize as to why the market decided to move up here and end this downtrend, but I'm not going to go into that in this video. All you have to know is that when there is a down or an uptrend, another word for that is trend line liquidity. All right. So when we're in a downtrend, this isn't creating sell side liquidity because it is sweeping itself. That is not important. This is creating buy side liquidity. Now, why is it called buy side liquidity? Well, because in order to sweep a high, you have to transact price at a higher level, right? So buyers in the market would have to agree to buy the asset at a higher price, and then holders of this asset would have to agree to sell their share at that price, which would obviously be higher. And then this would in turn cause the price of that asset, or in this case, the NASDAQ, to go higher, right? And that's exactly what happens, and that's why the market moves, ladies and gentlemen, all right? So this was just a quick video to tell you guys a little bit about what liquidity is, but we're going to make many more videos and try to go as in depth as we can without getting too weird, because if I try to go too deep to a level that I don't even understand yet, then it's just not going to make any sense to anybody, and then why would I even put that video out there, right? So I'm going to try to keep it as simple and easy to understand as possible while giving you guys a good amount of insight into the markets, right? But this is not financial advice, and thank you for being you, all right?